Hey everyone, welcome back to Corporate Decoder, the place where we see if Hewlett Packard Enterprise is still HPE-ing like a champion or is just a ghost in the machine. Today we're diving into their latest filing, and let's just say it's not all sunshine and rainbows, but there's definitely some color in those charts to discuss. Alright, so what we have here is a current report on Form 8K. Think of this as a public announcement for some really important stuff that just happened. It's like getting a notification that a big update just dropped for your favorite software, but this update is for a massive company. The date on this report is September 3rd, 2025. That's the day they officially put this out there for everyone to see. And the company we're talking about is Hewlett Packard Enterprise Company, or as most people know them, HPE. They're filing this with the Securities and Exchange Commission, the government agency that makes sure companies are playing fair and square with investors. It's like the ultimate adult supervision for the business world. Now, HPE is a pretty well-known name. They're big in networking, data solutions, and all sorts of tech infrastructure that keeps the business world running. You know, the stuff that's always there in the background, making sure your emails get sent and your online orders go through. But how are they doing financially? That's what we're here to figure out. This report also touches on what kind of stock HPE has. They've got common stock, the regular kind you usually buy, and also this interesting thing called 7.625% Series C, mandatory convertible preferred stock. Now that sounds fancy, and basically it's a special type of stock that has a fixed interest rate and is designed to automatically turn into regular common stock at a future date. It's a way for companies to raise money with some specific conditions built in. So what's inside this report that's really got our attention? Well, it's all about their financial results. They've released a press release about how they did for their fiscal quarter that ended on July 31st, 2025. This is where the juicy numbers are. Remember, information like this is crucial because it tells us how the company is actually performing. This press release, which is attached as an exhibit here, is the main event for this part of the filing. It's basically their official announcement of how much money they made, how much they spent, and basically their profit or loss for that period. Think of it as their quarterly report card. Then there's this other section about regulation, FD disclosure. What this means is that they're also sharing some other important information that everyone should have at the same time, preventing anyone from getting an unfair head start. It's all about fairness and making sure all investors get the same information. And here's something really interesting for shareholders. They're announcing a dividend. A dividend is like a company sharing a bit of its profits directly with its owners, the stockholders. For every share of stock you own, they're paying out 0.20. This is the fourth such dividend for their fiscal year 2025. And if you own shares by September 18th, you'll be getting that cash around mid-October. It's a nice little bonus for investors and shows the company is generating enough cash to share. Now, this is a common part of these filings. They talk about forward-looking statements. This is basically the company saying, hey, we're making some educated guesses about the future, but things could change, so don't sue us if our predictions don't exactly come true. They use words like expect, anticipate, and will to discuss their plans and what they think will happen. A big part of their future talk is about the integration of Juniper Networks, Inc. This means they've bought Juniper and now they're working to combine the two companies. This is a massive undertaking, and a lot of what they expect to achieve, like cost savings and other benefits, comes from making sure this integration goes smoothly. Think of it like merging two big puzzle pieces together and hoping they fit perfectly. They also lay out the risks, and for HPE, there are quite a few. They talk about the risks associated with executing Hewlett Packard Enterprise's strategy. This means that even with the best plans, things can go wrong. Executing a strategy is like trying to navigate a complex maze, and there are plenty of walls you might hit. They also highlighted external factors that could affect them. This includes things like the state of the global economy, trade wars, conflicts in places like Russia and Ukraine, and even the rise of artificial intelligence. These are big unpredictable forces that can really shake up a company's performance. For example, supply chain issues mean they might not get the parts they need to build their products, and economic troubles mean customers might spend less on their services. Another key risk is how well they and everyone they work with can actually deliver on their promises. This refers to the execution and performance of contracts. If HPE suppliers can't deliver on time, or if their customers don't pay up, that can cause major problems for HPE. It's a whole chain reaction. Going back to the Juniper acquisition, they specifically mentioned the successful integration of Juniper Networks, Inc. This is probably one of the biggest potential issues. Merging companies is incredibly complex. They need to make sure they can actually make the combined business work, hit their financial targets, and get all those promised benefits. If this integration doesn't go well, it could seriously hurt their future performance. Finally, we get to the exhibits. this is where they actually include the documents they're talking about. Here it is, Exhibit 99.1, the actual press release with all the detailed financial numbers. While the filing itself doesn't contain extensive financial tables, this press release is our window into their performance. It covers their results for the quarter ending July 31, 2025. This is what we'll dig into to see what's really going on. And at the end, we have the signatures. This is the official sign-off from the company confirming that everything in the report is accurate to the best of their knowledge. David Anchak, who holds a pretty important title as Senior Vice President, General Counsel and Corporate Secretary, is signing off on this. This shows that the highest levels of the company are vouching for this information. Now let's talk about the numbers themselves. While this 8K filing primarily serves as an announcement mechanism for their press release with the financial details, we can infer a lot. The report explicitly states the dividend payout of 0.113 per share. This might seem small, but for a company of HPE's size, it signals a consistent generation of cash and a commitment to returning value to shareholders. It's a sign that management feels confident enough about their ongoing operations to distribute profits. Looking at the bigger picture from their general discussion of financial health and the forward-looking statements, HPE is in a crucial phase. The acquisition of Juniper Networks is a massive strategic move aiming to significantly enhance their networking capabilities and market position. However, as the filing clearly points out, the success of this integration is a major risk. If they can't effectively combine the operations, realize the projected cost savings, and leverage the combined technologies, it could weigh heavily on their financial performance and future growth prospects. The mention of macroeconomic and geopolitical risks is not just boilerplate. It reflects the current global environment. Things like supply chain disruptions, trade policies, and global conflicts can directly impact a company's ability to procure components, manufacture products, and sell them globally. HPE, being a multinational technology company, is particularly exposed to these external forces. Their ability to navigate these challenges, perhaps by diversifying their supply chain or adapting pricing strategies, will be critical. The stock market often reacts to these kinds of announcements. Positive earnings, like the ones they're presumably reporting in the press release referenced here, can boost stock prices. However, concerns about integration risks or macroeconomic headwinds, also detailed in the filing, can temper that enthusiasm. Investors will be watching closely to see if HPE can deliver on its promises, especially following such a significant acquisition. So what's my take on all this? HPE is making big moves, and the Juniper acquisition is a bold bet that could either pay off spectacularly or create significant integration headaches. The dividend is a positive sign of financial health, but it's the successful execution of their grand strategy that will truly determine their long-term success. The risks they highlight are real and pressing. Managing global economic uncertainty and making this merger work are their biggest challenges. What do you think about HPE's strategy and these latest disclosures? Does the Juniper acquisition excite you, or are you worried about the integration risks? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps the channel. And if you want more deep dives into corporate filings like this, hit that subscribe button and the notification bell so you don't miss out. Also, don't forget to join our Discord community in the description for more discussions and insights. Thanks for watching, and I'll see you in the next one.